Amid the backdrop of, again, a ratcheting up of the tensions globally, what's your word of the day, Drew?
So it's recall, as in memory or deja vu, because, look, again, we're walking the tariff tightrope. And then on top of that, we're starting to have some concerns around earnings and the narrowness of earnings growth this year. So with all this investment delay and kind of continued consumer concern around tariffs, the only areas really driving growth in the market are the mega cap growth stocks and some of the secular growth themes. So, yeah, the word of the day, it's recall.
Where are you expecting the stock market to go as we head into the summer season?
Look, right now, the S&P's run ahead of our full year target. So we think a little bit of back and fill here, a little bit of chop. Again, as we work through this kind of messy news flow, especially around tariffs and just policy in general, it may break out if we feel like there's more conviction in fundamentals from here. But to us, honestly, this is back to where we were at the beginning of the year, where we'd rather buy on pullbacks than chase rallies.
It looks like you're favoring growth in the index funds, the NASDAQ over the Russell, and you prefer communications and technologies in terms of sectors. Why?
So it's funny, when growth gets harder to come by and you have less conviction in growth, you fall back to buying growth. So growth either becomes offensive or it becomes more valuable because it's scarce. So to us, leaning into growth sectors, indices over cyclicals and even defensives at this point is probably how you hide out in this market.
All right, about 30 seconds left. Let me ask you about your stock pick today, Instacart. Why do you like it?
Hey, look, this plays to the theme growth is defensive, and this is a stock that has it, and on top of growth, it has operating leverage. So a company that's going to grow the bottom line a lot faster than it's going to grow the top line.
Do you think that this is a stock where if there starts to be inflation pressure, that people pull back on their delivery orders?
They might, but this is a company that's going to take share. And honestly, when we think about grocery in the staples area, that's where e-commerce penetration is really low. That continues to be a tailwind for this company, even if we see a slowdown in consumer.
The other thing is they have the addition of ads, which is just an add-on to the core business. But in so many other places, it has been an ad-pressured environment. Why does it work for Maple Bear?
Because they don't really have it. So that's an extension, a natural extension of their business. And that's a higher revenue stream than the delivery business is. So on top of natural operating efficiencies, they're adding this new high margin kind of revenue line. So that gives it, again, more operating leverage as an overall business.